Moving on to our next topic, daily swing highs and lows. Daily swing highs and lows. Now, every turning point in the market forms a swing high or low. On a lower time frame, this might seem meaningless. However, if we use a daily chart and we see this form at a key level, and importantly, we also still have a draw on liquidity present, this becomes crucial and we can frame an entire model behind this idea. So over here we got a US dollar index daily chart. Now, first of all, what is a swing low and what is a swing high, right? Over here we see a swing low. With a swing low, you want to have three candles next to each other, right? One is higher closed than the middle one, and to the right of it, it should be higher closed than the middle one. So we've got one higher, one lower, one higher, and then we have a swing low. So over here, we've got a swing high, right? So one candle to the left is lower, one in the middle is higher, and to the right of it, it is lower. So anticipating high probability price moves with swing highs and lows. We need to see them form at a key level. So if we are bullish, we want to see a swing low form at a discount array and or after running another swing low. And if we are bearish, we want to see a swing high form at a premium array and or after running another swing high. So the two opportunities using the daily swing highs and lows, and the easiest model you will ever have, is the day after that 3-day swing bar pattern has formed. So we're going to focus on day number 4 after that swing high or low has been formed. We can also focus on 2 days after that 3-day swing bar pattern has formed. So 2 days after that swing high or swing low has formed, or day 5. So once the 3-day swing pattern has formed at a key level, we can look for day 4 to run previous daily high or previous daily low, right? So after that 3-day pattern. Furthermore, if day 4's body, right, the 4th day after that 3-day swing pattern has formed, if that 4th day body's candle closed above bullish or below bearish, right, we can also aim for previous daily high or previous daily low if the draw liquidity is still intact. So then all we have to do is work with the understanding of the open high low close or the open low high close, right? Taught in that first lesson of the mentorship. So this is hands down the easiest model you will ever have. You may not find a high probability trade on one pair every week, but within a basket of a few pairs, you will find one high probability trade every single week using this model. All you need is one trade a week to make a living of trading and pass all funded accounts you want. Right, so over here we've got a crude oil futures chart, a daily chart, and again we're gonna focus on that 4th day, right, after that swing pattern has formed. So we can see a swing high form up here, right? We've got another swing high formed up here, and notice how this is formed in a volume imbalance, right? So we've got a premium array over here, and we've got another swing high formed over here, and we're focusing on that 4th day, right? And notice how that 4th day every time almost is a big candle, and it goes into our draw on liquidity. So now after we focus on that 4th day, we're going to use our understanding of that open high low close or that power of 3, right, from lesson number 1. So this is day number 1 on the daily chart, right? Day number 2 over here, and then day number 3 down here, which forms that swing high on the daily chart. Now, is it in a key level? Yes, it is in a key level, right? We got that daily fair value gap fill, and then we're going to focus on the day after. So day number 4, open high low close, right? So draw out your New York midnight opening price. We want to see a manipulation or accumulation of sell orders above this New York midnight price line, right? How does that look like? Open high low close, right? So this is the daily candle we are anticipating to form. Over here we've got that accumulation of shorts above that midnight opening price, right? Over here, this is what we want to see, and then we got that break of structure lower, right? So day number 4 is the highest probability day to continue down into our draw on liquidity, and we want to see that accumulation above New York midnight, which happens. So we've got that power of 3, right? That open high, and then we're aiming for that low to expand and then close out the day bearish. We're forming a fair value gap, so this is the next premium array where you can frame your trade setup from, and we're anticipating that open, high, low, close to form, right? Day number 4, very important, and eventually we draw down into our drawn liquidity. Right, so over here we've got a Euro British Pound daily chart, right? And now think about that daily swing high or daily swing low again. We want to see that form at a key level, right? So over here we've got that swing low formed, right? Is it happening at a key level? Yes, it is, right? Because we got that daily discount fair value gap. We've got this discount level and that fair value gap formed down here. Now we're going to focus on day number 4, right? That's most high probability to run that previous daily high after that swing low formation has formed. So over here we've got day number 1, we've got day number 2 hitting that daily fair value gap in discount, and then day number 3 forms that swing pattern, right? And now we're gonna focus on day number 4 because that's highly likely to run previous daily high. So we got an easy draw on liquidity, and we're gonna use again our understanding of the power of 3, right? That open, the low, high, close of the candle. So how does that look like on an intraday chart? We've got that Euro British Pound 15-minute chart right now. And again, we're outlining those numbers, right? We've got that daily swing low form down here. We've got day 1, day 2, and day 3. So that's that daily swing low being formed down here at a key level. Now we're going to focus on day number 4, running day 3's high, because that's an easy draw on liquidity, right? And we know we have a swing low formed at the key level, so bullish order flow is very, very likely to occur. Higher time frame, we have the draw on liquidity up here, but first of all, we're going to aim for that day 3 high. So looking for that low resistance liquidity, we want to see those failure swings, right? That's what we want to aim for. We want to see a high resistance liquidity run with our structure. So if we run a low and we reject, then we can look for a setup afterwards, right? So we've got those failure swings up here, low resistance liquidity. We're going to aim for this daily high. Again, using our understanding of the power of 3, that open, low, high, close of the daily candle, we're going to outline our New York midnight. We're going to use our New York midnight opening price, right? We want to see a low form and then continuation up into our drawn liquidity. So the daily candle should look something like this, right? We want to see an open, we want to see a low form, then expansion up higher, and eventually closing the day bullish. So where does the opportunity lie, right? We've got that liquidity rate down here, then price moves up, and in the process of moving up, we have our drawn liquidity up here. In those failure swings, we form a bullish order block and a fair value gap. So this is an opportunity to go long and aim for that high on day number 3 and eventually expanding up higher, going to our drawn liquidity. So over here we've got a US dollar index daily chart. Again, we're looking for a swing low to form at a key level, right? So we've got this bullish order block over here. We outlined that mean threshold also, an important level, and now we can see that swing low pattern formed down here, right? One higher, one lower, and then one higher. And again, we're focusing on day number 4 and day number 5 is if the drawn liquidity is still intact, right? So on day number 4 over here, we're gonna aim for that previous daily high first. Now how does that look like on an intraday chart? We've got this 1 hour chart over here from the dollar index. Again, day number 1, day number 2, and day number 3, right? We want to see that swing low form at a key level on the daily chart, and then we're going to focus on day number 4. So where does the opportunity lie? We want to look for low resistance liquidity, right? So over here, we've got pretty much a lot of low resistance liquidity, all these failure swings up here. We're going into buy side of the curve over here. We've got this bullish order block supporting price up here. And eventually on day number 4, we can focus our attention on our entry model and then target day number 3's high and eventually more buy side liquidity in this LR or low resistance liquidity up here. So simply put, we can look for a fair value gap or an order block, and that could be our entry, and then continuing up into the draw on liquidity.